You're listening to The RealWealth Show with Kathy Fettke, the real estate investor's resource.
I'm excited to introduce today's guest. He has been a partner of mine in syndications for almost 14 years. Many of you know him. Many of you have invested with us, starting back in Oregon, then some deals in California, then in Nevada, Florida, Montana. So many exciting projects. I'm Kathy Fettke. Welcome to the RealWealth Show. Fred Bates has been a developer for over 40 years. And he basically either re-entitles land or he builds homes, and whichever is going to give the bigger profit. And he's been working with me for many reasons over the past 14 years because we're good at selling homes, we're good at market research, and we've got a huge network that wants to be a part of deals like this. So today, Fred is going to tell us what he sees in today's market, what kind of opportunities are out there. And he's got two really good deals that he's bringing to the table that we are going to partner with him on that I'm really excited to share with you. So Fred, welcome back to the RealWealth Show.
Thank you.
So we have been working together for, almost 14 years now. I met you in 2009. And of course, that's when real estate, at least residential for sure, was getting hammered. Was probably the worst part of that real estate downturn, or the best part if you're on the buying side. And you had a similar experience on the commercial side, where, as I recall, you were walking into Bank of America and seeing boxes of foreclosed everything.
That's right. And of course, it was around that time, of course, that we ended up acquiring our project up in Portland, Oregon. But it was also at that time I was working with Bank of America down in Florida and was looking to try to buy just about anything that might be coming back to the bank. And of course, eventually we were able to buy the Cannon Ranch commercial property.
Yeah, and that one did really well. And then I did another project at Cannon Ranch that we're still in, and those investors I think are gonna do really well. That's the Murata. If anybody wants to look that up, it's the largest crystal lagoon in the U.S. We re-entitled it from golf course to a lagoon. It's very, very cool. They're still selling homes there, but we're just selling lots. It was 4,200 lots there. But so when I met you in 2009, it was a listener of the RealWealth Show who introduced me to you and said, this guy's been been a developer for decades and was in retirement and had to come out of retirement because there were just too many deals that to be had in 2000.
Well, opportunities for sure.
Yeah, so many. But
and of course, in Oregon, as you know, we bought that condo project. It was taken back by the bank during the hard times. A developer couldn't make the payments. Both he went under and then the bank went under, and the FDIC had it, and they offered it out for bid. We went ahead and we submitted, I think it was $3.5 million bid on that property.
I don't know what you bid, but we ended up
If it was three, then it was three. But I know the developer had about $10, $11 million into it, and the bank was $12 or $13 million into it. So there was $20-some million worth of property sitting on the ground. We bought it for $3 million. Now, yes, it was a bad market. We went in and we finished off the property, finished off the buildings. I think that was another $7.5-8 million, and we sold out for about $15 million in gross sales. So it turned into a very nice project at a time when hardly anybody was doing business.
Yeah, and it was my first syndication. I did not even know what that was at the time, and a lot of our listeners, they didn't know either. You had done it before, so you kind of guided me through it. And of course, we had an attorney in San Francisco who specialized in it. For those of you who find good deals and want to raise investor funds, there are very strict rules about it, rules I didn't know about back then. I sent out an email and said, oh my gosh, we've got a great deal. Who wants to participate? And later I found out, no, you need a PPM, you need an operating agreement, you need to file with the SEC when you take investor money. It's no longer a real estate deal, it's a security. So lots of lessons learned back then. And since then, you and I have, I think we've done 8 or 9 deals together.
I think
about.
at least that, yes.
Yeah. And they've all ranged from, I think the Dublin one was over a 30% IRR to investors. You've never lost any of our investors' money, and always the projects have come back with great returns.
Dublin, of course, was another opportunity. We were still in a lulling market when we went in and acquired the old office building that they were having a tough time leasing it, so they wanted to sell it. We were able to buy it, get it rezoned for single family detached, and turn around and bulk sell to Pulte Homes.
Yeah, let's see, you tied it up. That was a very cool project, and one that's a little bit similar to one that you've just brought to me recently, where you were able to do a purchase sale agreement, but a 2-year close with an option for another year. Right. It was $10 million purchase price, but all we had to come up with was about $1 million. And I think
was about $1.3 million or something in investor money.
Yeah.
And that was for the option payment and the entitlement work that we did on it. And then we turned around and we sold it for someplace.
About $20 million.
$20 million. And of course, out of that 20 million, we paid for the land, and then we're able to give great returns back to our investors.
So I want you all to hear this again, because this was a phenomenal deal. And that's one of the things I love about you, Fred, is you're so creative. You tied up the property for a $10 million purchase price. It was an old office building we're going to tear down and re-entitle. We weren't building, just re-entitling the land to residential and selling those lots to a builder. There's great risk in building in California, and you didn't want to do that. So we just re-entitled it. $10 million. All we had to raise was $1.3 million. Sold it within that about 2 to 3 year time frame for double, for $20 million. So you take out of that $20 million, pay off the $10 million, and that was a $10 million profit. Incredible return to investors. You have just recently brought me a deal that's sort of similar in the sense that we're going to actually build homes in Oregon. But we don't have to purchase the land, and we don't have to come up with the horizontal construction risk, which is putting in the roads and the utilities and so forth. We don't have to take on that $10 million risk. We only pay for the lot once somebody buys the house.
That's right. In this particular case, we've optioned 157 lots. We are buying the lots for $60,000 a lot. The finishing costs on these lots, which are the smallest one is a half acre on undulating land, forested land overlooking Klamath Lake, would cost us about $90,000 to $95,000. So we're buying them for less than we could finish them. So typically this would be almost pay per lot cost, and that is on developed lots. These lots have water, sewer, everything to the property. We don't pay for these lots until just before we close escrow to a third-party buyer. So we're going to go in, build over their property, and then put it on the market, sell it, and that's when we close with the landowner. We have a 5-year option on that property, and we should be able to build all those houses easily within that 5-year period and sell them out.
And because we're not having to raise that $10 million to acquire the land and get the roads in and the utilities and the sewer and all that, you're returning capital fairly quickly on this. I think by year 2025 is projected.
That's right. In about 6 months, we'll start returning. From the time we start building homes, it takes us 6 months to do our model complex and get our first homes ready for closing, and we will start closing. So about 6 months after we complete the raise, we will turn around and start distributing cash back to our investors. That will be a return of capital. We can do this in this particular project because typically, as you know, we raise a smaller amount than it needs to do the entire project, and we just keep rolling it forward. In this project, since we're not buying the land outright and having to buy a second phase and having to go in and do road, streets, curbs, gutters, and so on, from the day of the first sale, we will be having profits, which we will turn around and give back to our investors as a return of capital. And as we move through it, a preferred return, then final profit share. So this is very low risk project.
And that's nice, because in some projects we've taken the profits and reinvested it into the project, and that can create income without actually paying the capital back to investors, which creates this phantom income tax. And investors don't like to get taxed when they haven't received the profit themselves. It comes at the end. So I believe we're avoiding that in this scenario.
In this case, that's true.
Yeah, so that's a big benefit. Now, I haven't done very many deals with you in the past few years, and I'm guessing that's because you weren't finding things. I mean, it was just such a crazy hot market, and land prices were so high, and there was, of course, the COVID risk and the shutdown, the site shutdowns, and the difficulty in getting supplies and materials and so forth. But why this project? Why are you kind of coming out of the woodwork again? And what made you want to do this?
Well, there's a number of projects that I've been working on over the last 5 or 6 years. It's just that everybody wants too much money. As you know, that's why we're not building in California. You pay a premium for property. You pay market rate plus. And that's because there's a lot of public builders there, and they just bid the property up. They're not interested in really making money. They're interested in producing widgets. If their stock values are all based on the volume of sales. Yes, they like to make money, but it's truly about the widget. Whereas we don't make money unless we make a profit, because early dollars go back to our investors, second dollars go back to their preferred return. We're back end oriented. So we always try to get a good deal on properties. They just haven't been available. I've done due diligence on probably a dozen properties since the last deal, and only now are some of these deals starting to come to fruition. This one I've been working on for probably about a year. We've got another one that we're going to be talking to you about shortly that we've been working on for almost 5 years. And only now do the people start to think that maybe it might be a good time to sell.
Wow. Yeah. And I know that you're real picky about the projects that you select. I mean, how many would you say that you reject compared to the ones that you accept?
Well, I mean, in truth, we probably do closer to 1 in 10. Now, a lot of them get tossed out early on in the due diligence, but a lot of them we spend a lot of money on. I mean, doing geotechnical studies, soil studies, the aerial reconnaissance, market analysis, and so on before finally we feel that it just doesn't make the cut. In this particular deal, this was a deal that the city of Klamath Falls wanted us to come up there. They had seen our project in Reno, Argos, Bait Stringer Reno, the Argos and Quest project, and they thought we would be a good addition to their city. They, as I told you before, the Air Force up there is adding the F-35 to their fleet. Right now, they instruct Top Gun pilots in the F-15. They're going to be instructing them in the F-35, and they're going to increase the base size by about 300 people, and they need more housing. There's housing up there, but it's typically not a good product. So we're going to be coming in with a nice product. These people, the Air Force, will have competition because we've got tons of people from California going to Oregon looking for something nice. And for the first time in Klamath Falls, they'll be able to buy a finished house. Typically, they would have to buy a lot, find a contractor, do plans, build a house, and so on and so forth. We'll be doing our typical development where we'll be building a minimum of 3 houses a month and having a product to sell.
These are beautiful, beautiful lots overlooking a lake. I imagine there'll be people from California who just want to live near a lake, and Oregon who would be buyers as well.
Exactly. No, it'll be, I think it's a home run.
Yeah. And again, this is for investors looking for a passive investment. This is not a cash flow deal like our Texas fund where we're just buying homes, fixing them up, and renting them for monthly cash flow. This is a passive investment for accredited investors only. The preferred return is 12.5%, I believe, on that one.
12.5% preferred return.
Yep.
The nice part about this, again, is that you start getting your capital back about 6 months after we start the project. And you get back capital every month, and then move to preferred return, and then finally profits.
Yeah, so I'm excited about this one. I'm excited to, hopefully get a tour up there before it gets too cold.
At your leisure, whenever you want to go up.
Okay. Okay, good. And then we've got some other exciting projects, but they're not out yet, so I can't talk about it. But again, this is accredited investors only, which means that you either earn $200,000 as an individual or $300,000 as a couple. This is SEC law, not my rules. Or you have $1 million net worth, excluding your primary residence, or you are licensed through the SEC there's different licenses that would qualify you, and you can find out more about that at realwealth.com. Just click on the invest tab and you'll see funds and syndications, and then it'll say current projects. Click there. It'll take you to my syndication site, which is Grow Developments, and you will find it there. If you have any questions, of course, just reach out to Kathy at Real Wealth, and I'd be happy to go over it with you. I think it's a really great opportunity at a time when it's hard to know what to invest in today, and people want to be conservative, and you should want to be conservative. Can you just explain again how you see this project as conservative when there is development risk?
Well, Kathy, we're raising about $10 million, and we're going out and we're starting 18 homes day one. And we'll pour 18 foundations. We'll be finishing 3 homes a month. We're also doing 4 models. So all of their money is basically sitting on the ground, and we'll be selling this out. Even in a bad market, we sell houses. It would just mean it might go a little bit slower, but we will be selling them. We will be making full margin on them. And it won't take long for us to have all of our money out along with their profit.
Yeah, if as long as we don't see another pandemic that shuts everything down. But even then, hey, we saw what happened to housing at that time.
Well, I mean, if you go back, the pandemic hurt us. I'll take our biggest project up in Bozeman, Montana, and the pandemic hurt us primarily from a supply line standpoint. We went from selling 6 homes a month down to 3 homes a month. And we're now back at 4 homes a month, and we're moving to 5 homes a month. And the only restrictions we're having on this really is supply side.
Yeah. Yeah. Just getting the, what do you mean?
All cash buyers.
Yeah.
If we could do 6 a month, we'd be selling 6 a month.
Got it. Yeah. Okay. Well, Fred, a lot of times I'll come to you at times when I'm scared. I'll put it that way. I was scared in 2009, 10, 11. I didn't know if there would be a United States of America. I was hoarding food at the time and taking money out of the bank, putting it in the safe. And you kind of talked me through that and calmed me down that, everything was going to be okay and we'd get through it, and that, we'd been in bad times before. Same thing with COVID. It was a time of panic, and you kind of walked me through that. Now, there's a lot of people who are concerned with these high interest rates and with the Fed trying to slow down things, that they'll succeed and that we would be moving into a recession. What are your thoughts on what's ahead, and what if there is a big recession and people can't afford to buy homes in Oregon?
First, I would say that I too was concerned about there being a recession. It wouldn't necessarily stifle our buyers. Our buyers typically, or a lot of them anyway, are all cash buyers. In this particular project, of course, a lot of people will be coming in for the Air Force. They're transferring in. They don't stop just because the economy is slow, and we'll have buyers there. But as you know, in the bad markets, that's the time to buy. And that's what we're trying to do now. We're trying to scoop up everything we can so that we can take advantage of the good market. If you're truly in this business, you have to buy through thick and thin, but now is really a good time for us. I don't see, even the people that I see on the guys that I follow on television and in the Wall Street Journal who were concerned about recession are starting to agree that it looks like a soft landing. Interest rates now they're down, at least to us, down to 7 3/8 today. And we think they're going to start getting lower the first of the year. So it's all in a positive direction. I'm not too concerned about this particular product because, like I said, we can sell our home up there for at least $100,000 cheaper than the next guy doing a comparable home.
Yeah. Okay. All right, Fred. Well, it's just always a pleasure to speak to you. And again, for our listeners who don't know who you are, you've been a developer for over 40 years now, mostly in California.
Over 47.
Oh, wow. And
Sorry.
looking great. You started young. Uh, and you've been through a few downturns, and like I said, I met you in one, and that's what you shine at. I mean, there was one before that where you were also being called by the banks to pick up great deals. Was that
We had some great opportunities in the 80s. If you remember when the S&Ls went under, we were able to buy property cheap in the banks. Then in the 90s, there was that cash for trash going on. All the developers were going under. The banks gave us their workouts. In other words, they were taking properties back from developers. They would have us either finish them off for the bank, or we would buy them out ourselves and develop them. But good times bring great times or bad times bring good times for us, and sometimes great times.
And it's a family business for you. So your son is the builder. And
my son is the builder and really oversees the day-to-day on all of the projects on the ground. My daughter, Tidra, and you've met both of them, she runs the office side of it. And I have a daughter who's a CPA that came with us a few years back and now is the chief financial officer for the company. So yes, we've got the basic company is 3 deep, and then we've got a couple of salespeople out there too that are family.
Yeah, you've been my secret weapon over the years. A lot of people have wondered how I've been able to do such big and cool projects, and you are the reason. You have the experience and the know-how. And so if anybody wants to see the projects that we've done together, this is not even close to the projects you've done in your lifetime, but just that we've done together through RealWealth. Again, you can go to realwealth.com, click on the Invest tab. You'll see the drop down for funds. That'll take you to Grow Developments, or you could just go there directly, growdevelopments.com. And there'll be a drop down also for current and past projects. On the past projects, you'll be able to see the things that we've done and the returns to get an idea. Some of them were just, like I said, just knocked right out of the park and with very low risk, which is, I think, for both of us at our age, we don't want a lot of risk.
I don't want any risks, and we've got one project and one project only at this time that is running a little bit slow. And it might be because I missed the market on product, but we're advertising a little bit differently and it's starting to come on a lot faster. But right now, for us right now, the market's been good.
Yeah. And that one's in Carson City, Nevada, which it's a beautiful project. It's right
It's
near
a beautiful project.
state capital. Yeah.
That's right. Everybody that's seen it loves the project. It might be just a little bit too sophisticated for Carson City. However, like I said, we're starting to get more Californians over the hill now. We're advertising to Californians, and it's starting to pick up. So I think we'll be in good shape.
And the price point is right. For Californians looking to get away from those high taxes, this is driving distance to the Bay Area, very close to the ski resorts, and very good price points. What's the price point for those homes?
These start at around 500,000 and go to about 700,000. A comparable product, not even really as good, in South Shore or North Shore, you're talking about $2.5 to $3.5 million.
Yeah. So if you want to, see those properties, it's a great place to be close to California, but not pay California taxes. What is the website for those homes?
Little Lane.
It's called Little
Carson
Lane.
City, Little Lane, yeah, or Little Lane, Carson City.
Little Lane, Carson City, yeah, they're really cute. That'll give you an idea of the style. And then in Bozeman, Montana, we have another really successful project that you can look up there. That is, what's the website for that? I should know.
I just go to PrescottRanch.com.
Prescott Ranch.
Yeah, Montana.
Yeah. Yeah, that's great too. If you want to.
Yeah, I can tell you have too many projects going on.
Right. You can't remember the website. All right, Fred. Well, always great to see you. Thank you so much. And we'll hopefully talk to you soon.
Thank you for having me.
And thank you for joining me here on the Real Wealth Show. Again, if you want to see more about our past projects, just go to growdevelopments.com. You'll see the drop down, I think, under Invest on past projects. And then current projects will be the one we've got posted there with him. Another one is the Oklahoma fund that we're doing and the Texas rental fund. These are all really different. So there's kind of something for everybody. Bummer is that it's for accredited investors only. It's an SEC law. Wish they'd make it easier. But when you go to Grow Developments, you'll see our Texas fund. That's our renovation fund. We're buying older homes, renovating, getting really big equity in those and renting them out for 5 to 7 years or so. We're definitely on track or outperforming our pro forma on that one. Very exciting. The Oklahoma fund is a build to rent with 4plexes. We're working with a builder to bring on brand new supply in an area in North Texas, basically right across the border in Oklahoma, where there's so much growth, but not enough housing. So we've been able to negotiate a really good deal with a builder there for build to rent. And my partner on that one is a property manager as well. So she already owns properties in the area and understands the demand. And then, of course, this deal with Fred Bates it's called Ridgewater. You'll find all those details at growdevelopments.com, along with some future projects we have coming out. Again, I'm Kathy Fettke. Thanks so much for joining me here on The Real Wealth Show.
The views and opinions expressed in this podcast are provided for informational purposes only and should not be construed as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, go to realwealthshow.com.